Hello everyone, welcome to Crypto Wayne's Academy. I'm Peter O'Brien and I will be with you today in the second episode of Indicators course. Last session, we talked about one of the most frequently used indicators called zigzag and how to use it to determine the swing high and swing lows. Today we'll be talking about one of the most famous indicators that you might have heard also. Moving averages are a set of indicators that are used by most of the traders. First of all, let's get to know what is moving average, and then we'll get familiar with different types of it. Moving average shows the average price in a specific period of time in a line graph. For instance, if we want to have a comparison of the current price and average price within a month, we can use this indicator. Note that the indicator can calculate the average of open, close, high, or low price for you and compare that with the current price. When we get the average price in a specific period, it can help us to realize the tendency of the market, whether to be bullish or bearish. I'll explain the usage of indicator later in this video, but now it's time to see how to apply a moving average on our chart. So let's move to my screen. All right, we again move to the indicators section and type moving average, average simple. Here it is. This is the primary version of all moving averages that simply calculates the average price without adding any other variable. Here I add it's added here. After adding it, you can see that a bar will be shown here. It's bar. And if we click on settings, we'll have access to the input data of this indicator. The first option, length, is one of the most important inputs of this moving average. The length should have correspondence with your time frame. If you want to have trades in short term and generally trading in smaller time frames, length between 10 to 30 would be most appropriate. If you are trading in midterm and having your time frames in like hourly or 4 hours time frames, a length between 50 to 100 would be suitable for you. However, in case you are trading long-term and usually opening spot positions in daily or even weekly time frames, 100 to 130 would be useful for you. So, it's crucial for us to enter the length according to our trading period. Otherwise, you may get unexpected or odd results from the indicator. Let's get back to my screen now. The second option in the settings is called source. Here you actually decide which price should be taken as the main input. In this list, you can see open, high, low, close prices. There are also some other choices that you can choose based on your trading type. In case you may have doubts, I'll elaborate the definitions for you concisely here. HL2 stands for high and low divided to 2. The average of high and low, to put it simply. HNC3 stands for the average of high, low, and close. OHLC4 stands for open, high, low, close, divided to 4. The average of these. And the last one, HLCC4, stands for high, low, double time of close, divided to 4. Most popular sources are usually, close, this one, and the average of high, low, and close, HLC3. Though it doesn't mean that you cannot use other sources. It totally depends on your strategy and trading period because all of these are derived from the price and no add-ons are here. As I mentioned earlier, there are a number of moving averages besides SMA, all of which are used in different conditions. Before going to the next moving average, I want to emphasize again what I mentioned in the first session. Until here, in zigzag and SMA, the origin was the price. And the indicator doesn't include anything but price. But majority of indicators are not like this. And technically speaking, if you start to use indicators, you are getting further from the origin, the price. The next indicator I will be talking about is called moving average exponential, abbreviated into EMA. And functionality of EMA is very similar to SMA, but the only distinction is that EMA applies more emphasis on the current data. In other words, the newest price data will impact the moving average more, while older price data will have less impact. Let's move to my screen again to see how to apply it on the chart. In order to add EMA, all you need to do is to move to the indicators section and type moving average exponential. Here it is. It's added on my chart here. You can see a blue line on the candles. The settings of EMA is highly similar to SMA as we had seen before. What I said about the length is also applicable to this indicator as well. Due to the distinction I mentioned earlier about SMA and EMA, most of the traders prefer to use EMA on their chart. A common point among traders who are working with indicators is using multi-moving averages on their chart to have a thorough understanding of price tendency. For example, you can have a SMA and an EMA on a chart while one of them has low length, but the other one shows the average with higher length. Let's apply one here with each other. Well, I have an EMA here, right? I set the length to 30 as a short one, and I set the source to the average of high-low close. And let me change the color here in the style section. Let's make it, let me see. Let's make it yellow. It might be, yeah, it's much more visible here. I move to the indicators section again, and I choose moving average simple. As I said, one is my favorite. SMA here is added, and I go to the settings, and I set the length to 60. Let's have a midterm length. And I set the source to high, low, close 3. In order to make it visible again, I move to this style and I manage the indicators line. Let's make it white. It might be a better choice. All right, now I have a short-term indicator having more emphasis on the recent price called EMA, shown in yellow line, and another midterm indicator that simply calculates the average, shown in white. Let me zoom a little bit here. I want to show you something. All right, what can you see here? Let me make it clear for you. One second. Where was the circle? Yeah. I mean, this part. Okay. Pay attention to this section I highlighted for you. Right. We see that the price average has increased here in short time. I mean, this yellow line, as you can see here, it's started to increase. And here again, they are having the same highs. But on the other hand, in a longer view, my SMA, which has a longer length, is still descending. And it's not showing a sign of, bullish movement. It can be a good signal if both indicators show one direction that assures us about the price tendency. For example, if you pay attention here, I mean this part, as we are, getting closer to the static support and resistance line, we can see that both yellow and white indicators are in one direction. And here it is. Look at this sharp movement here. It's time to summarize everything we said. In this episode, we learned two of the main moving averages, SMA and EMA. We also talked about their difference and how to apply any of them on the chart. We also talked about the trading technique with these indicators, and that was using multiple indicators with specific settings to have a quick mindset of the market, whether it is remarkably bullish or bearish. In the next episode, we'll talk about another type of moving average and more trading techniques with these indicators. It's not just knowing the names and applying a few lines on the chart. It's all about using them to get money from the market. So we need to know how to translate what the moving average tells us. Finally, till the next session, I want you to open TradingView and apply various forms of SMA and EMA on the chart. Use a short-term SMA in a smaller time frame, then increase the length in bigger time frame, then apply an EMA and compare them with each other in different assets. Remember, practicing is one of our red lines here. You need to practice. So what I will tell you in the next session won't be ambiguous for you guys. That's all for this session. Have a nice day. Trade bravely.